Hear me? Hello?
Yeah.
Hello.
Yes.
So,
Fortunately, I have quite a bit of a distance, so I should be there in 5 minutes, almost there.
Okay. Okay. The Indian Union Budget 2015 is over. Quest to understand the fine print continues, particularly in the world of tax, where a lot of interesting insights come up, and of course there are some minds lying around in the field somewhere. So we're going to do several things. Of course, look at what the good things were, but we're also trying to point out the red flags. And of course, like before, we did before the budget, we're doing this with Arun Giri, founder of Taxsutra, and Ameya Kunte, also of Taxsutra. And we've got a fine panel today from all over the country joining us, the best names in tax. Dinesh Kanabar, Dhruva Advisors, Rohan Shah, Managing Director of
big picture. The big picture is that Arun Jaitley has delivered whatever we discussed in the pre-budget hangout, be it what Dinesh Bhai said, what Mukesh said, what Gautam Bhai said. I think all the key points he's delivered. The headlines are right. I think I would give him 8.7 out of 10.
Non-adversarial regime, I mean a tax regime, or at least it seems to be heading towards
I think that proof of the pudding is in the implementation.
Right,
As
and
Dinesh
that's something that people have been pointing out even before. So let's begin with you, Dinesh Kanabar, Dhruva Advisors. How are things looking? What did you take away? What was the one key thing that stood out for you positively, and the one thing that stood out for you in a sense negatively?
Probably I'll combine the two parts, what is positive and negative. So I think I would agree with Arun that in terms of intent, this is something truly exceptional. The other part which I find is that in terms of implementation, there are several gaps. So as Arun was pointing out, the number of provisions that have been brought about which seek to provide clarity is exceptional. But unfortunately, the way they have been drafted, it actually creates more issues than what they resolve. And therefore, if I had to put one takeaway, I would say that this is a budget which is great on intent, but maybe lacking on implementation. Maybe I'll give you just one example and then leave it. Take, for example, the point which Arun made, that we have clarity that there is no MAT on foreign institutional investors. Something which is very welcome, and you would have said, wow, this is great. But the way the wordings of the section are, it leaves open to two things. First, that companies, foreign companies, other than FIIs are liable to MAT tax, and income other than capital gains is liable to MAT tax. So, great on intent, poor on implementation.
Right. Okay. Let's go to Mohan Parasaran, Senior Advocate.
Escalating the rates, some of the exemptions, pruning the negative list, all moves in absolutely the right direction, and I dare say that there is more of that to come. And if the date of the 1st of April 2016 really has to be the date on which they implement, then I think some of these changes will actually come and must come in the middle of the year as well. So I think those were very positive moves, as was the fact that there are far more benign provisions in the context of penalties. There is an ability pre-adjudication to achieve a payment and therefore ensure almost no penalty in cases where the longer period doesn't apply. So that is the other move which is very good. Clearly there is a expansion of the tax base, both in terms of direct and indirect, and depending on how the black money scheme comes in, you might have a one-time bonanza. But to the extent that there is a thrust to say that we want to move towards a situation of non-cash payments, that is not only going to be good in the context of direct tax, but it's also going to be good in the context of the implementation of the GST. At the same time, you see a few provisions. So, if I had to point to the factor of what has happened with the leather foot
Past as well, how do you see the sort of more definitive deferral of GAR?
Govind, in fact, GAR came in when Mr. Parasaran was advising the government, Mr. Nariman was the Solicitor General.
Yes.
They lost the Vodafone case. We should look back at the history and ask him, but for the Vodafone judgment at that time, would GAR have really come in?
Yeah, what are so many problems? Let's again not go into it, I say. But I think it was expected that the finance minister would postpone the implementation of the GAR. Naturally, this will actually encourage the sentiments of foreign investors. And as you said, all of us expected this at least by 2 years. I at least expected at least by a year. And that has happened. And it is always good, no, it is postponed. And it has to be streamlined. Everything has to be streamlined. We'll have to wait and see, how things take.
So one follow-up question on that. There is a feeling, and Dinesh and Mukesh mentioned in the budget hangout, that you need to train the officers for GAR. Do you actually believe that the officers need a lot more intensive training on GAR?
Getting that right from the beginning, because they have a fixed attitude. All of us know about the attitude of the.
Right, I think we've lost. Let me put the same question to Mr. Parasan. Mr. Parasan, broadly, again, do you see this as a positive? Will companies actually benefit? Will it all even out, and maybe they may end up paying more tax later if we rate to 25%?
Yeah, this is actually an initial boost. As you said, there is a fixed timeline of 4 years, and this actually will actually encourage the companies initially. Possibly the rates better. But once actually, if you reduce, it is always difficult to increase the rates after the end of 4 years.
So I have one specific question, follow up on that. When the finance minister mentioned this point in Parliament, he also gave an example of other countries and said that you need to move to international best practices. You need to move to a lower rate like other Asian countries, and also I am going to take away the exemption so that we have fewer litigations. So are you of the belief that if you take away the exemptions from the Income Tax Act, the fewer litigations, sir? Do you actually subscribe to that view?
No, I do not subscribe to that view straight away, because you can't actually make a point straight away, And I think litigations are never going to get reduced. We'll have to see again how the things are going to be implemented. And again, if I think the mindset does not change, implementing the various measures.
Starting with, the passage of the bill in Parliament, thereafter the place of supply rules, thereafter the enunciation of the recommended national legislation, how the states react to that, and that we give states. So for example, there is this rumor that on state GST, states actually want a band, and the band will effectively go from 12 to 18%. Now, if that happens, then the real-time cost of GST will vary from state to state, but could actually be higher than the 27% we are talking of. So to me, the situation is a series of steps will be taken, must be taken. These are milestones that all of us can monitor to see whether we are in the right direction and at the right pace. If we are in the right direction at the right pace, then I think everything that he needs to do, he should close up ideally by the 31st of December 2015, having done which he then needs to give the 3 months industry to actually migrate into the GST, because it will impact a lot of sourcing patterns, a lot of selling patterns, a lot of the IT preparedness, etc. So I think we are moving there. I think it's a move in the right direction. One can't undermine its complexities. There was a subtext in what the FM said to say, well, if it doesn't come, it will sort of affect certain revenue collections, etc. So I think he's cognizant of the fact that there are too many imponderables which are open today. But I think it's in the right direction. What we now have to ensure is it's at the right pace.
Right. Thanks for that, Rohan. I think it sort of more than amply describes the landscape and the challenges that lie ahead, but also a useful point about the December 31st, 2015 should be followed if things are to kind of get off the ground. Let's go to the next one. We are talking about the thumbs up so far. We've got only 2 more to go. Indirect transfers threshold set at 50%, and who better to answer this, Dinesh Kanabar?
No, a very, very welcome proposition. There are a few quarrels which one can have on the way the definition is, but overall a very, very right amendment. there is a clarity with regard to what are we looking at, assets, gross versus.
Should have worded it negatively. So these were two observations in section 9 which perhaps could have been better. Dinesh bhai?
I would totally agree with you that, and this again is a arching point, Govind, which I mentioned to you. Everywhere the intent seems to be right.
Yeah.
If I can put it a little bit directly and crudely, finance minister seems to be messages to the bureaucrats. Actually, draft doesn't necessarily carry forward. Yeah. To the point which Ame mentioned, I'm not worried about it because it's the only way the tax office can get to know how the changes have occurred. The wordings could have been positive instead of negative. Also, there is this issue regarding rules being prescribed that when the Indian value is say 60%, for example, then it's not the entire gain which is taxable, it's only pro rata. Those rules have yet to be announced, so we'll have to see how those rules come about.
And simple example, tangible and intangible assets for that 50%. Now I had a question and it may be a silly question, that let's assume that tomorrow 70% of WhatsApp subscribers in the world are from India. So would it give the tax department the leeway to say that that intangible here is in India? So are we leaving some leeway? Is there some interpretational leeway given to the department there?
Yes and no. Actually, I would view it positively to say that notwithstanding that my assets in India, my intangible. So take the simple question of IT enabled service, where you have got a delivery backbone in India, yes, but really all the contracts are sitting outside India and the IPR is sitting outside India. So I would put it the other way around, that if valuation was able to demonstrate a cumulative valuation of tangible and intangible was outside India, then notwithstanding that the physical assets are in India, you may not be liable to tax.
Rohan bhai, anything on that? You've dealt with indirect transfer cases as well, Rohan bhai.
Yeah, so my here is that it certainly is a move in the right direction. There is greater clarity than we had before. The one situation which intrigues me is that all of this really seems to transactions which will occur after the 1st of April 2016. What I would have ideally liked to see, because I believe that has really created against Indian investment, is how do you deal with all this? And those pending cases, many of them, how are you going to deal with those? Because they are the ones which cause the negative sentiment. Now, if we do have a guidance to offer into the future, what I'd like to see is whether this is followed for the past. The second issue is several of these are coming up in court, and law have to be instructed as to what position they should. And if the position of this government is to defend the demands which are already there, then we will really undo the good that we are trying to do through the changes that we are proposing. Right. So, like Dinesh said, I think some of it was self-stated, like treaties. Others, whatever we are providing for, we are providing into the future. But what really has caused the anti-India sentiment is the past, and it seems we're just leaving that to the courts, which could be a resolution pattern of 5 to 10 years. And I don't know who wants to wait that long.
Okay, so let's look at, having gone through some of the bad news, having gone through some of the good news, let's look at the bad, the red flags as we call them. Let's begin with the 2% increase tax. And if you were to add the Swachh Bharat cess, which as I understand, but which could land on our heads at any point, things don't look so good, and it potentially wipes out a lot of other things that individual small sort of citizen you may be think that you may benefit, but actually you won't. Rohan, let me come back to you on this. How are you seeing this?
Unfortunate in terms of the fact that we have to take all these increases sort of in 1 year, but inevitable. Going to get to a revenue neutral rate of anywhere between 24 to 27%. Fortunate, and actually it is my sense that if he does want to bring the GST in on the 1st of April 2016, we might see even some mid-year adjustment which will drive it up further. Because if you were just a pure service player, both in terms of your inputs and your outputs, you are going to really have to leapfrog from the 12.36 last year to end by 1st of April 2016, which is series of changes in the same direction. So unfortunate, but we've left it to the last, and we will have to just take these changes. And I don't think this is the end of the so-called bad news. I think there is something probably also coming mid-year.
Right. So let's move on. I mean, this a little further, but let's move on. So the other point that we're looking at in red flags is the residence rule tightening for companies. So if you're a foreign company resident in India, how are you defined, and is that definition a little vague, which allows the income tax authorities to perhaps are least expecting it? So we've also got Sudhir Kapadia now joining us. Sudhir, if you are able to hear us, what's your assessment of this this step?
Hi Govind. On this one, there are two things. One is this is there from the direct tax code. There is an announcement made that the direct tax code is now buried, and whatever needs to come in has come in. So this was a provision, as I said, from the direct tax code. Number two is a similar provision exists today. For example, in the UK law, many other laws as well. So I think in the principle around this provision, there can't be much of a quarrel. Effective management should determine the residency rules for a company. The issue is that there was certain language in the direct tax code which even continues now, which is to say that even if a single meeting is held in India, it could lead to an interpretation of some decisions having been taken in India. So the language which is used there is what is causing concern. Frankly, by itself, that language should not cause a concern if we have the experience of a tax administration which will look at things holistically and will only attack those situations where in substance decisions are taken in India. But because we still have a culture where notices are issued based on a literal reading of the law, and then determination is sought to be made in the cases where further proceedings have to be taken. The concern is that anything which a foreign company does in India or an Indian company does in India can lead to a situation where a residency test is sought to be attributed by the tax administration. So I think to summarize, the concern is in the language. I believe suitable guidance is being worked out by the CBDT, and we should really press for this kind of guidance which makes it comfortable for foreign companies as well as Indian multinationals not to be worried about held in India constituting residency.
Is this best to the backdoor by any chance, or deriving some inspiration?
Rather than looking at BEPS through a backdoor entry, if I could just put a bit of a different view from what Sudhir regarded as having a permanent establishment. Anybody would say that's a welcome step, right? I mean, it doesn't merit any debate. And yet what you have done is to say, here are 10 conditions. If you do not fulfill all those 10 conditions, then you will be regarded as having a permanent establishment. Now, if you look at it cumulatively, I would want to bet as to 90% or 99% of the people will not be able to fulfill all those 10 conditions. That means that you are now staring at a situation where the after you to say there is a so noble on intent, but where does it come?
But so therefore, let me ask the larger question then. I mean, so this was supposed to be a investor-friendly budget, right? Or at least so everyone was thinking. So is this an investor-friendly budget then? Foreign investor particularly, again tying it with so many other things that we're talking about, Make in India.
Or would say the devil is in the implementation.
So look at two simple provisions which are GAR being pushed back, no question. Now, when you have a provision like that, it cannot be sort of manipulated by anybody. It is right out. For example, wealth tax being abolished, I think is a great thing. You had a law which has been around for so many decades, and you came back and said this is not resulting in any tax collection. Let's just kill it. Okay. But when it looks at many of the other provisions where you have made room for interpretation, I think the wordings are really pathetic.
Okay. On 263, Govind, we've done some. I'd want Amay to just take it through in 30 seconds and get Mr. Parasaran's view on it, both on 263 and black money.
Yeah, which is of course the next point that we have there. So Amay, quickly on reopening cases, 263.
Yeah, so this particular section, Govind, talks about power of the commissioner to reopen the cases which are prejudicial to the interest of the department. And there has been a significant litigation on this point for several years. But the scope of the commissioner power has been expanded, and it gives a sort of more to the commissioner. And as there are 4 new introduced, one of the conditions is that the commissioner is of the opinion that the tax assessment is without any verification which is made, that should have been made. Now, this is very subjective. I mean, even if there is one cash voucher, irrespective of whether it is prejudicial or not, form a basis for reopening the assessment. So this, I mean, on one hand, we are talking about non-adversarial regime and improved administration. On the other hand,
Right.
you are discretion, sir. Right.
Okay, got it. Thanks, Amir, for that. Let's come to the big one in some ways, given that the Finance Minister also spent a long time talking about it, the black money amendment, which cracks down quite severely, unambiguously, assets that are held abroad, and there is very little sort of question mark on what could it be and whether or not someone could have violated the rule or not. Mr. Parasan, are you happy with this development, given that this is something that you've been quite keenly following in the past?
Yeah, of course, the bona fides of the government are quite apparent. But how are you going to get back the black money? You know, the impression as though, see, the government is going to get back the money back into India. Whether that's going to really happen,
Yeah.
I think that's not going to happen.
But
You
Mohan
may
sir-
impose penalties.
Yeah, Mohan sir,
Or can
I'll
prosecute.
just read out the comment of one of your colleagues, senior advocate N. Venkatraman, and that it's better to levy heavy fines rather than impose a jail threat to recover black money. Which way would you swing? You think that the jail threat is a bit too much, too harsh?
See, jail threat, of course, gives a psychological sort of fear, but I think that's not going to work out. I think imposing heavy penalties, on the other hand, I think would be much more rational than this sort of a prosecution. India, as you know, takes a number of years.
You know, last year we introduced imprisonment provisions on service tax.
Right.
And anybody who's dealing with service tax will tell you what does that mean. So we have situations, live situations, where people are in by the service tax authorities and said, are you making a payment or we put you behind bars, without issue of a show cause notice, which is patently illegal. But then people start worrying to say, and my only concern is that when you put extensive provisions where you can put somebody behind bars, how those provisions are interpreted and actually implemented is a matter of concern.
Sudhir?
So what's your experience there?
So the experience there has to be that
Or rather, let me say the cumulative experience. If you were to compare the good and the bad, the misuse and the use.
no. So wherever so we are getting back to the FEMA. Inspector. No, FEMA Raj, where anybody could, FERA Raj rather, sorry, where at the mere threat of people being put behind bars, people were really worried, spent sleepless nights. We don't want a revival of that.
Okay, but I think the finance minister, if I heard him correctly, his thing was that you would know if you had acquired assets overseas and not informed the Reserve Bank appropriately, and therefore to that extent you deserved a jail sentence or whatever the case may be.
So this again goes back. Is the punishment of a crime commensurate with the crime or not?
Okay, fair enough. So very basic question. So Sudhir Kapadia, do you have a view on this?
Yeah, just 2 points there, Govind. This has been a debate ever since the budget was unveiled. I think one is, to my knowledge, you have a fairly draconian act like the FATCA now in the United States of America. It has its own critiques. But in terms of reporting requirements, it does require, reporting on all kinds of foreign assets. In terms of compliance, it is arguably extra rigorous because it requires compliance by institutions all across the globe. So, to be fair, all I'm saying is it is not in today's world, if a country is serious about making an attempt to bring unaccounted income to taxation, it is not uncommon to find so-called draconian provisions. So again, like the earlier provisions we discussed, in principle, I wouldn't say that this is uncalled for. So that's one point. The second might own to be seen as deterrence. The danger is these are not revenue-raising provisions by itself.
Right.
So I would put a slight nuance to the earlier debate. I don't think this provision, in my view, is meant to really bring back money. It is more to do with a strong deterrent. I am of the considered view that going forward, you have to be a very, very bold or any other adjective you may use to put pen to paper and not disclose assets which you own outside of India. Deterrent laws in place.
That's very
Whether it
interesting.
is
Sudhir bhai and Rohan bhai, I would want both of you to comment on this point. Are we taking this inspiration from Western economies, Western nations, whereby tax fraud is a criminal offence and you go in jail? So are we somewhere moving to international practices, if not best practices? We are deriving inspiration for quite a few of these amendments from the Western nations. Sudhir bhai.
No, so Arun, as I said, I am not sure whether the inspiration is from one, but TATCA has at least one draconian measure which is out there. I take the points about how FERA was sought to be unleashed in certain cases. So I was going to conclude my comment with this, that like in everything else, the concern is that it should not be misused. That's a valid concern. All I'm trying to say is that here you, on the one hand, under pressure to say that what are you doing about black money. In fairness, we never had a specific provision being announced to tackle black money. We should debate around what the contours of the provision should be. But in principle, frankly, all of us who are honest taxpayers should welcome the move of a very strong deterrent legislation, which hopefully makes people think twice, thrice before brazenly seeking to evade taxes.
Right. Okay. So I mean that's a position to take and one difficult to dispute. Yeah. Rohan?
In my mind, the issue is we have to understand context. In service tax, what you're talking about is an interpretational divergence. And if the interpretational divergence leads to a tax demand of more than 50 lakhs, they can effectively arrest you, and they've misused that provision. The context in which we are dealing with black money, I believe there is inherently a fraud on the Indian system. The person perpetrating the fraud knows that yes, it is a fraud. He's kept money away. Now the question, what are the alternatives that you have to effectively bring this back? Amnesty has its own contemplation in terms of how Supreme Court looks at it. But in my mind, given the context of what you're dealing with, and given that the trigger is that there is a fraud which is already played on the Indian economy, I think you needed strong measures. I think there would be no critique of these measures if there were a greater belief in the system of tax administration. And all of the criticism that I hear is, are our officers responsible enough to use this properly, or will they misuse it? I don't think that's a damnation of the provision. I think that's a damnation of the system, and I think the finance minister must work to ensuring that there is.
But Rohan bhai, if I can interrupt you there,
how his officers will conduct themselves.
But Rohan bhai, you've appeared in so many writs, assisting senior counsels. Don't you think that somewhere you have the high courts which have over the last couple of years not been afraid or not shying away, I should say, from using their powers under writ to actually clamp down and do the course correction where needed, where the officers have. Rohan bhai, we've seen so many instances in the last 12 months.
You are right, but a writ court exercises an extraordinary jurisdiction, and every time that it exercises a jurisdiction, it goes back to the point I was making. It's a critique of tax administration. So that you have a safety valve through an extraordinary jurisdiction, yes, it may exist, but the point is, every time that a writ court has to interfere, the greater is the commentary that the system is dysfunctional and people are not doing the right thing. So I think I really have no critique of the law which will come, but I do think that there has to be ensuring it's not misused. Yes, the writ court is a safety valve, but the lesser you use it, the better off you're going to be, because nobody wants to ultimately get recourse through High Court and Supreme Court. It's way too costly and it's way too time consuming.
Govind,
of time, we're almost 45 minutes, and a lot of you are watching and asking questions. We wish we could keep everyone back, tie them in and keep answering those questions, but we have to move on. Let's get a quick round. Everyone, I think what we're trying to understand as we went through the good points, or we call them the thumbs ups, and the red flags, what is the synthesis, what is the task ahead, more importantly, for the government at large and the tax department and administration in specific year ahead. So let me begin with you, Sudhir Kapadia, and 30 seconds to wrap it up.
I think one is, after a long time, there is a very clear policy announcement by the finance minister on what he wants to do vis-a-vis tax policy. To me, that's a big positive. Enough time is being given. We might phase out incentives. We will go towards a lower, a regime of corporate taxation as an example. On GAR, for example, grandfathering investments. I think those are unprecedented for a very long time. And I think the concern, I would say, is in relation to some of the procedural provisions. Whether we talked about powers of the commissioner, some of the other areas we talked about, those are the red flags. But in terms of the policy direction, refreshing change for the better.
Okay, so refreshing is Sudhir Kapadia's sort of concluding feeling and comment, of course. Rohan Shah, what's the feeling that you're going away with? I mean, at the end of it all, having known the tax administration as you've known it for all this while.
So I think, from a directional perspective, a very, very good budget. I think the challenge is for him to really build the tax administration and to restore the credibility of the tax administration. That will take away a lot of the ghosts which are in our mind and in the mind of the assessees. But directionally, one of the better budgets, but a lot to do in terms of tax administration.
Right, and that's really one of those ongoing concerns which was highlighted even before this budget was read out on Saturday. Mohan Parasaran, to you then, I mean, as someone who's been in the system, who's perhaps contributed to the writing of some of these laws, who's faced all these frustrations, what does this look to you like as we leave?
I bet
Well, as everyone has said,
he has been worried.
Yeah.
No, well, as everyone has said, the intentions of the finance minister has been very good. The budget has been actually praised by everyone. And I think since the intentions have been good, I think they will have the willpower to implement the real intentions of the budget, because the government has the mandate of the people and they won't dither.
Right, okay. The mandate of the people, and they will not dither, and there lies the fundamental faith that that sort of acts as the tailwind for this whole process. Dinesh Kanabar, last.
I would say again, great on intent. The fact that you have given a direction, the fact that you have very, very positives. So one small thing which was the only thing which actually really disappointed me was that there was nothing.
Let me ask you a question slightly. Go to look at it over a decade, right? So you've seen many budgets, more than one government for sure. Is this fundamentally different?
Our budget, a very welcome, a very positive budget. I have never seen a budget really, why in a decade, in the last, where somebody's come back to say for the next 4 years, the rates are going to be stable and going down.
Okay.
The only little disappointment which I had really, apart from all drafting and all those issues, really was that the Make in India initiative does not seem to have got too much of impetus from this budget.
Right.
There was this inverted duty structure, and while there are some baby steps in that direction, I wish a little bit more could have been done there.
Okay.
But barring that, I would really say it's absolutely.
On that, Govind, my colleague Amay, who said right from word go, I think in the beginning, that this may be old wine in new bottle, and I'm afraid probably what Dinesh Bhai is saying, that you've not really seen much there. One last word, Govind, there, that tax clarity, tax certainty, what we are saying, according to me, these words are oxymorons, and anywhere in the world you see, Govind, there is nothing called as tax clarity. How much ever he does amendments, how much ever we gives clarity, we will do the hair splitting, we will go back to the Westminster rule, we will try to exploit every last word in the section. Right. If we don't do that, all these discussions will be academic, right, and tax journalists and tax professionals will be out of work. Right. So I think we must give credit to Arun Jaitley. Never satisfy tax professionals and tax journalists.
Right. No, I mean, the question that I didn't ask, but you have the Foreign Account Tax Compliant Act in the US, from which so many US citizens are running, right? Because they suddenly find themselves coming into the dragnet, which they never were, and they always think that they lived in a very liberalized tax regime that was the US, which is not the case anymore. So things changed. Nothing is ever constant.
Final word.
Okay.
Any quick final word, you can hear us?
Yeah, Arun, hi.
Yeah.
Quick point on the professionals and on the black money part. I think in the black money, apart from the people who are guilty, people who abet in the crime are also being covered. So I think professionals need to be more careful going forward.
Right, right. On that note, hopefully more black money will be found and brought back, more importantly, and hopefully things will get easier for all the tax professionals and the few tax journalists who are following this beat. That's all we have time for. It's Boom Live in association with Taxsutra signing off. Thanks for watching.